After 4 quarter interest rate cuts in 2025, the Bank of Canada has ended the year with a hold and signaled that rates are likely to stay at 2.25% for some time to come. Our Mackenzie Gray is at the Bank of Canada and he joins us now. All right, Mac, take us through the thought process that the Bank of Canada has given for an interest rate hold.
What we've heard from Governor Tiff Macklem is the idea that they think the current rate at 2.25% is appropriate to make sure that inflation stays in the 2% zone where it's largely been. Of course, that's the middle of the Bank of Canada's target range, while also making sure that the Canadian economy has enough support. You know, where the interest rate goes, when it goes up a lot, that's meant to constrict the economy, make sure if it's running too hot with high inflation, that things come back down. When they lower interest rates a lot, where they were for a large portion of course, during COVID and relative to where interest rates have been previously during the 2010s, they're trying to spur economic growth. They think they've kind of got the sweet spot here at the 2.25% range to make sure that inflation is in line, the economy is doing okay. And broadly, we've seen the health of the Canadian economy relatively resilient. There was a lot of concern here at the Bank of Canada, of course, within the federal government and from a lot of private sector economists about the U.S. tariffs impacting the Canadian economy. The assessment from the Bank of Canada is they've been, look, you know, if you're in the steel sector, you're in the lumber sector, you're in the auto sector, things that are getting hit by the tariffs, things aren't going great right now. But there hasn't really been contagion. If you're in other businesses, there hasn't been the same kind of impact there. Consumer spending has been relatively resilient, and we've seen hiring actually pick up, the unemployment rate going down to 6.5%. So there's lots of positive signs there for the Bank of Canada for them to think, okay, we don't need to cut anymore. And that's, of course, a big change. You know, we've heard from the Bank of Canada and Tiff Macklem before that they were ready to step in and make changes as required. Today, the signal from the bank is, look, this is where we are probably staying for a while. Of course, there's a lot of uncertainty around the U.S. tariffs, what happens with the renegotiation of the USMCA that could change that. But a pretty clear signal from Tiff Macklem today that if you're thinking about interest rates going down any further, that this is likely the basement for the time being.
All right, Mac, let's talk about then the pros and the cons. What are the upside and also downside risks that the bank sees for the Canadian economy?
Yeah, of course, the U.S. factor and Donald Trump, I think, is one of those key downside risks. There's a lot of uncertainty about not only what's going to happen with sectoral tariffs, if there's a potential deal that can be had, if other tariffs get added. You know, we talk about a lot, those things potentially changing there. But I think the real big picture, and Tiff Macklem talks about this, is what's going to happen with the renegotiation of the USMCA. You know, this kind of mirrors what we hear from Mark Carney a lot of the time, that in his estimation, Canada has one of the best deals of any country with the Americans. You know, roughly 80 to 90% of goods go into the U.S. tariff-free because of the USMCA deal. If that changes, that's going to be a significant issue for the Canadian economy. Macklem talks a lot about how the tariffs are making the Canadian economy less efficient at this point in time. Way more tariffs on potentially all goods, like we see with a lot of other countries, could be a big issue there. You know, the upside risk in terms of things going well for the Canadian economy that could see them potentially raise rates would be, you know, unemployment continuing to go down, which we've seen a good trend, or at least good numbers recently within the Christmas season, lots of hiring there, and continued resilience in the Canadian economy. If the affected sectors by tariffs are able to reconfigure and deal with those issues that they're facing from tariff fronts, if they're able to diversify markets away from the U.S., like we've heard Mark Carney saying he wants to do, that could potentially lead to further increases in rates that we really haven't been talking about for a long time.
All right, Mac, a question that a lot of people want to know the answer to. What exactly does this all mean then for the Canadian housing market and mortgage rates?
I think for a lot of folks, if you were hoping for the bank to cut further, it seems as though, from what we've heard from Tiff Macklem, that that's not the case. So you wouldn't expect rates to go down substantially from where we are right now, in particular variable rates, which are much closely tied to what happens here at the Bank of Canada on a rate-by-rate decision basis. You know, it also gives some certainty, I would say, to builders out there to make decisions on if projects want to go forward. We talk a lot about housing starts, building more supply to try and bring costs down within the Canadian economy, to deal with the number of people who are coming to Canada too when it comes from an immigration perspective. This would give some certainty to builders and also for people who are looking to buy from those builders to make decisions going forward. We have seen the Canadian housing market, you know, it's very different. You look at the condo market in Toronto, that's going very terribly right now. But if you're buying, you know, freehold homes, it's a different calculus in different parts of the country. So, you know, you got to look at it from a regional perspective. But the big picture is, I think this does give certainty to both buyers and builders in terms of where the Bank of Canada is going to be likely for a good portion of 2026, with those caveats of we don't know what's going to happen with the Americans, and that could change the course that the Bank of Canada has to take, both on the upside and on the downside.
All right, that is a look at the last interest rate decision of the year. Mac, as always, thank you for the breakdown.
Thank you.
That is our Mackenzie Gray reporting from the Bank of Canada in Ottawa.